That Nitin Aggarwal is joining in now. He's the head of the BFSI Research Institutional Equities at Motilal Oswal Financial Services. Nitin, hi, welcome to the show. You heard Abhishek out. He listed very beautifully what the expectations are from the sector. But you tell us from the entire pocket, which are the companies that you're most bullish on this time? What are the growth expectations? And where would you be cautious now?
Yeah, hi. So yes, certainly overall numbers are going to see moderation. That's a process that's been going on for over a year. And so this quarter, we are looking at a 6% earning growth, ex of HDFC Bank for private banks, around 12-13% for PSUs. And this compares to when the year started, these numbers are 40% growth for private banks and over 100% growth for PSUs. So the moderation is continuing, and probably for the coming quarters, this trend will continue. And in terms of banks, wherein we think the steadiness will continue the numbers, we like ICICI Bank, wherein we are looking at a 16-17% YOY earnings growth, and SBI, wherein we are projecting a 16,000 crore PAT. Last quarter was a little depressed because of the pension and the wage provisions that the bank had to take. And while some part of it is still to come through, but Q4 is seasonally a strong quarter. So wherein we think the numbers will look much better on a sequential basis. And amongst other private banks, we like IndusInd Bank, wherein we are expecting stable margins. And business update is already out for most banks, including IndusInd. And we have a very steady growth on both the loans and deposits. And that, backed by some improvement in credit cost, will enable a 18% YOY earnings growth. HDFC Bank, I will say, is sorry.
Yeah, sorry, please come.
HDFC Bank is where we are expecting a 15,500 crore sort of PAT, but we are not putting out any number on Credila and being a non-core gain. But otherwise, the reported PAT, of course, will look a lot higher than what we are putting up.
Okay, now those are individual sort of banks, but that's earnings in the bag already, right? What about sort of making adjustments to future earnings? Net interest margins, for example. Now, the big theme as we started this year was rate cuts, both in the US and from the RBI as well. That is now looking like a distant kind of event, maybe sometime in whatever September, October this year, if that. Even here from the RBI, do you think that warrants a little bit of adjustment on the upside on NIMs across banks? Have you done that, Nitin?
Yeah. So, no, we haven't really changed numbers in the last couple of months. Of course, we did some revisions at the time of preview, but this entire expectation about the rate cycle getting pushed back is something that we all need to recalibrate to. And our own view internally is that we will not see a rate cut until at least the end of this calendar year. And which is where, but in a way, I think it's not so negative as an outlook for the overall banks, because it gives time to banks to readjust their overall funding cost. Because any upfronted moderation or reduction in rate cycle would have led to a reduction in the loan yields, and that would have further impacted margins. But now banks can recalibrate these adjustments better, and which is where the earnings will be a little more even. Or we already had a very uneven year in terms of quarterly progression, as I talked about in FY24.
Nitin, the big concern in Q3 numbers was the NIM contraction. Now, you believe in Q4 NIM contraction will ease. What is the reason for that? And what is the expectation on margins going into the next 6 to 9 months?
Yeah. So while we still expect the NIMs to moderate, but it's the pace of moderation that will ease in Q4. And already, if you look at for some banks, say for ICICI, which has had double-digit contractions and margins in the prior quarters, we are expecting a single-digit decline now. So it's essentially the repricing of deposits, which is getting largely completed. And there has not been any further increase in the deposit rates in the recent months by most banks. And this stability in the repo, which is also going on for over a year, is leading to a stability, therefore, in the lending yields also. So which is where we believe that the margins for the near term, until the rate cycle starts to turn, have stabilized. While there is still some downside risk, but that is very marginal when you look at in context to how the decline has been over the year. But our view as such for the coming year in FY25 is that margins will still moderate a bit more.
Some more moderation. And on growth, you started off by saying the private sector banks will report a 6% growth, which was 40% at the beginning of the year, and PSUs will report a 12-13%, which was more than 100% at the start of the year. Do you think growth rates will continue to moderate? What is your own expectation for FY25 from current levels?
Yes, I think growth rates, yes, will still moderate because the margins as such overall are going to be still a little soft. And even on the loan growth side, we had a 16% growth in FY23. The current year is also going around the same number. And we expect even the loan growth to moderate to 13.5 to 14% range in FY25. So for these reasons, we expect the overall loan growth to moderate. And we are looking at nearly 14 odd percent growth for private banks and around 17% growth for PSU banks in FY25. So that both these numbers are relatively lower versus what we had in FY24.
Okay, got it. Finally, let's wrap this up with the NBFC space. What is your thought over there, and what are the stocks that you're bullish on? What is the kind of growth that you're looking at?
Yeah. So overall, NBFCs, I think this postponement of the rate cuts cycle that we were all expecting has going to relatively have higher cost of funds overall. So the expectation of a decline is not going to happen as much in a hurry. But overall, loan growth is still going remains good, and asset quality cycle still sees positive trending overall for the sector, and which is where we think the earnings growth will still be steady for the NBFC space as such. And therein we like Shriram Finance, Chola amongst the top ideas. PNB Housing is another team that we like.
All right, we will leave it at that, Nitin. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Well, let's move